if Bitcoin goes to as high as I think, gold is going to go multiples of today's price as well. I mean, they both, they're both sound money. I mean, I think I've used this in the past. I'll do it here. It's just, gold is analog sound money. It's great. 8,000 years, huge Lindy effect. And, Bitcoin is digital sound money, much newer, riskier, harder to understand. A lot of people aren't in it yet, but they're coming.
Greetings and welcome to our show. My name is Trey Reik, and I'm here today with Larry Lepard, managing partner of Equity Management Associates in Wellesley, Massachusetts, at least part of the year. Hey, Larry, thanks for being here.
Hey, Trey, nice to see you again, and great to be on a pod with you. We haven't talked in a while.
Excellent. Good to see you. So, as one of the world's most articulate and outspoken advocates for the benefits of hard money, I think the Wealthion audience is pretty familiar with your work, you and your message. But we're getting together today for a more special occasion. And the big occasion is that after 4 decades in the business, Larry the Legend, as you are sometimes called, decided it was time to publish his first full-length book, which was published last week and is available, obviously, at Amazon. Name is The Big Print, which I think will lead people in the right direction. So, Larry, congratulations on your first book.
Oh, thank you, Trey. It was not simple. I think you've done a lot of great writing and communicating yourself, so you know how hard it is to do things well. And I did this quickly. I did it in 6 months, or a little over 6 months, and so it was quite a challenge.
So myself, being an old school reader, as we were just discussing, I read with a yellow pen and a red pen. So I bought my hard copy last Friday, and I jumped into it this weekend. And my greatest observation is that I am really amazed how much information and analysis and history on both a personal and academic level you packed into this book without it ever really becoming too heavy or dense. So I was never bogged down or overwhelmed. The whole thing flowed with great pace. And I congratulate your editor.
Well, thank you. I was worried about that, and I think I tested it on a lot of people. Some people did bog down a little bit. I think, you didn't bog down because you love monetary stuff. I think the average reader, chapters 11 and 12, they may be a little too heavy for the average reader, but you can read the other parts of the book and get the gist of it pretty easily.
No, I really, really enjoyed it. Great job. So I thought we would start by asking you why, after 4 decades and sort of 2 decades in hard assets, why is now the right time? Why was now the right time to write this book? And what are you trying to accomplish with its publication?
Great questions. So, as you know, because we've both been fighting this battle for 4 decades, it's been a very frustrating battle. And I think my frustration boiled over in the spring of last year when I saw a couple of political debates or things on TV, and it was blue team versus red team. And they were talking about all kinds of things, but I was just so frustrated that nobody was talking about the core issue. I mean, as you remember in the debates last fall, or the one debate last fall, there was no talk of the deficit or the debt, which to me are probably the biggest issue facing the country right now. And so when I saw this, I just thought to myself, somebody's got to write this down. And then maybe more importantly, somebody's got to try and write it down in a way so that the average guy gets it, because you and I get it because we're in this world and this is what we do professionally. But the average person isn't even aware that this is an issue, and they're watching, they think that inflation is caused by greedy corporations because that's what some politicians tell them, And I thought, I got to try and straighten that out. And so I just figured, hey, I'm going to do my best and write a book to try and straighten that out. I also happen to think, though, and I think you probably would agree, that it's kind of timely because things are really coming to a head. I mean, we're in a very big fiscal mess with a debt doom loop that we're in, and the spending and the deficits. And, we've already had a bunch of big prints. I mean, the book is called The Big Print, but, these big prints started a while ago. There was a big one in 2008, and there was another big one in 2020, and I think more are coming. And so, the pattern now is pretty well established. And I just thought, gosh, the average American's not necessarily thinking about this or aware of this. And I'd like to see people protect themselves because, as you and I both know, we're boomers. A lot of our boomer cohorts and crowd, they're all crowded into stocks thinking that stocks are going to continue to make them rich. And sadly, I don't think that's going to happen.
Right.
And so I wanted to try and issue a warning. And so, I mean, the book's kind of a warning to try and address that issue.
Right. And I don't mean to oversimplify, because there's a lot of history of financialization, classical economics, all of which, believe it or not, I enjoyed. And then what I refer to as the advent of the modern era of unconventional central banking. And of
Right.
course, the demise of hard money in the modern financial system. But I think it's fair to say that the message of the book, and not to oversimplify again, is it's basically a way to get the common man introduced, I think, to the wonders of Bitcoin. Is that a fair?
I think that's right. I think that's right. And gold too. I'm still a gold bug, Trey. At my core, I still got a lot of gold. I believe in gold. I run a gold fund. So,
Mhm.
I think they both have a lot of merit. They're different. They have different risks and opportunities in each one. But yes, I mean, I think the idea was I want to get the common man to understand, or a woman to understand, that we are in a fiscal mess, that's going to impact their lives in terms of inflation and the stock market, which is very overvalued in the future. And that if they don't have some allocation to gold and or Bitcoin, they're likely to I think, experience regret in the next 10 or 15 years. And so yes, I'm arguing for those two things. Now, obviously, as you know, I've gone full crazy orange pill.
Mhm.
And I think Bitcoin is a more asymmetric bet than gold, and therefore I own more Bitcoin than I own gold. I didn't start out that way, though. By the way, it's what's happened is Bitcoin's gone up a lot.
Mhm.
But so yeah, it's a call to try to help people to understand that monetary debasement is going to hurt them, and that the two right choices to solve that problem are gold if you're more conservative and you don't want volatility, or Bitcoin if you want to be aggressive and you want more price performance. But the price performance isn't free, as you know. We've had some huge drawdowns in Bitcoin, and people have to be aware of that when they get involved in it. So.
Mhm. So that leads to my next question, which is, when you use a phrase like "once in a humanity" to describe
I know it sounds hyperbolic.
Bitcoin's perfection, I seem to remember that your day job, you spend an awful lot of time working with emerging gold
I
miners.
do. I
And
do.
I wonder sometimes how you reconcile the once in humanity perfection of birth of Bitcoin
Well,
with
I still
scratching in
go
the
ahead.
Earth's surface for an ancient metal that appears in the Earth's surface at 4 parts per billion. So it just seems the two are almost diametrically opposite. In their
Well, they are, and you're right. I do have a legacy gold fund, and I do still believe very much in gold. And I don't think a lot of people think that Bitcoin's going to instantly flip gold, and I don't think that's going to happen, because there are 8 billion people on the planet that understand that gold is money,
Mhm,
and it is, until Bitcoin came along, it's the soundest form of money.
mhm,
But I do, the once in a humanity. I know it sounds hyperbolic, but it really, I say that because until Bitcoin came along, everything that and we all know that money is somewhat of a collective illusion. It's what we all agree has exchange value. I mean, this is Karl Menger's Austrian term. I mean, it's all a matter of perception. I mean, we perceive the dollar has value because we can go buy things with it. And there was a time when that was shells and salt, and there've been tobacco, and lots of things have been used for money. But the dollar is what we use today. And until Bitcoin came along, here's the important point. Until Bitcoin came along, every form of money, every single one before, had dilution, which is to say that its supply grew over time. So the number of monetary units grew. Now, gold was the best. It grew the smallest at 1.7% a year, but it still grew. And in 50 years, we'll have twice as much gold on the planet. It's still much better than fiat, obviously. So here comes Bitcoin, and a lot of people say a deflationary currency can't work. We can talk about that, but here comes Bitcoin with a scheduled fixed supply of 21 million. That's it. And so that's different. That's really different. And I don't think, again, I don't think hyperbolically. I kind of compare it to, like, it's like, there was an era pre-air flight, and then there was air flight, or there was an era pre the telegraph, and then there was the telegraph, or it's an invention. It's a type of money without any dilution.
mhm.
And that I submit that that's an invention it's a meaningful invention, because we've had thousands of years of monetary dilution in history, and now we don't have it in this new form of money. So that's why I make the statement. I know it, to some people, I know it's hard to get your arms around it, and it sounds extreme,
Mhm.
but it's factual. I mean, it's a form of money based on math.
Mhm. So how do you advise, and I know everybody's investment horizons and goals are different, but how do you advise people to sort of reconcile Metcalfe's law and the great power of exponential, opportunity that Bitcoin has
Yeah.
with gold miners that you still have such a passion for it? Is there a place
Well,
for both in people's portfolios?
I think there absolutely is, Trey. I really do. I think that, look, we're all old enough and smart enough to know that there's nothing in life is certain. Even the success of Bitcoin is not certain. There's technological risks, there are other risks. And so,
Mm-hmm.
I think when you're investing, you want to construct a portfolio.
Mm-hmm.
And what I try to argue, I have a lot of clients who are on the older side, and I never suggest to any of them that they go heavily into Bitcoin.
Mm-hmm.
But I do suggest very strongly that they don't have zero Bitcoin
Mm-hmm.
because the upside optionality, the asymmetry, and that's basically, look, why do you and I invest in gold miners? Because we know that they have an asset which, generally speaking, the prices and the valuations are so low compared to the underlying value of the asset that if they're able to pull that asset out of the ground on some kind of reasonable terms, they're going to generate cash flows that are, multiples of what we're paying, even total market cap right now. And so that's that asymmetry, in a gold bull market and a gold miner bull market, gold stocks go up 10, 20, 50, 100x. And so
Mm-hmm.
that's the kind of, and now don't get me wrong, some gold stocks also go to zero.
Mm-hmm.
I've owned them.
Mm-hmm.
And but if you select them carefully and you get a balance, and you get more that work than not work, that's the beauty of the asymmetry there. So, I think that there's, in life, I think there are room for lots of kinds of investments. About the only thing I do not recommend investing in now. Even owning stocks, as overvalued as they are, there are some good stocks, particularly in the commodity space, particularly international stocks. Brazil's very cheap right now.
Mm-hmm.
But, the only thing I really think people just are silly or foolish to own is any kind of debt with duration.
Mm-hmm.
Treasury bills, 3 months, 6 months, a year, fine. You want to get your 3 or 4%, 5%, that's great. But 10-year at 4%, no. A 30-year at 4%, no.
Mm-hmm.
I think that the owners of those are going to really see substantial diminution. Their wealth is going to go down.
Mm-hmm.
Thanks so much for watching our discussion here on Wealthion. If you would like help with your wealth efforts, please head over to wealthion.com/free for free portfolio review.
So you mentioned in the book, you think Bitcoin, and you're not predicting this, but you mentioned that with certain patterns in 20 years, Bitcoin could conceivably hit $7 million a coin. That's the only time
That's crazy. I know it sounds crazy.
My question is, if you're even 1/100th right, how do you still stay motivated about everything else? In other words, we both have a common friend who I circled the paragraph you mentioned in 2018 when 100% Bitcoin. And,
yes,
how do you keep yourself from doing that?
I try to be a balanced guy, Trey. I just try to recognize that nobody knows nothing. Do you know what I mean?
Right. Mm-hmm.
and therefore, I look at all sides of the issue, and like I said earlier, it's become a bigger part of my portfolio. It didn't start there; it went up a lot,
Mm-hmm.
and that 7's not guaranteed. But I think if you read it and you read and understand the Metcalfe's law piece of it, that's the thing. The thing that I don't know. I'll disclose this about the book, and I wonder what your reaction to it was. But when I was writing the book, when I went and I looked at the math
Mm-hmm.
of how much these network businesses have increased
Right.
since the IPO.
Yeah, you have that paragraph on Google, Amazon, etc.
Right?
227,000%.
That kind of just blew my mind. I'll tell you what Trey's talking about. There's a paragraph. Since its IPO, Amazon is up 218,000%.
Mm-hmm.
Since its IPO, Google is up 9,000%. Since its IPO, Facebook's up, 1,000%, whatever. They're big numbers. General Motors, from 1916 to present is up like 400x. So I was taught investing in a world of linear growth and PEs and PEG ratios and Sharpe ratios and all the traditional metrics that any investor learns, Graham and Dodd kind of stuff. That's what I was taught. And then along come these network businesses. In 20 years, big, powerful, almost monopolistic networks have gone up thousands and thousands of percent. We've never seen this before, Trey. And it's interesting. I confess in the book, I missed it. I mean, I remember looking at Google and saying, gosh, this thing's growing like a weed, but it's not making any money and it's really expensive.
Mhm.
Nah, I don't want that.
Mhm.
Same thing with Amazon. Same thing with Facebook. Do you know what I mean?
Mhm.
And so I just missed it. I mean, networking businesses accrue value in a different way. You know, they really do, because they kind of play, it's kind of winner take all. And so, you know, those are the businesses. I mean, as you know, Bitcoin is a monetary network with a fixed supply, so it's accruing value in kind of that same way, right?
Mhm.
So, therefore, like I say again, I think the important takeaway from anybody watching this and skeptical of Bitcoin is to learn more about it and accept the possibility that you don't have to buy a lot of it, but because of this network, you know, growth and valuation growth, you might be really experience regret if you don't have some of it.
Right. So you bring up in the book that the four sort of risks you've identified with Bitcoin are
Yeah.
technical, you know, regulatory, adoption, and protocol. And
Right.
I have to ask the devil's advocate question because
Sure.
you know you understand it much more than I do. I think it's pretty obvious from the tone of my questioning, but you know, Satoshi invented this thing, or someone claiming to be Satoshi.
Yeah.
So, what is to prevent someone from just inventing something better?
I think it's a great question, and it's the MySpace Facebook argument. I think it's a great question.
Mm-hmm.
So primarily because the invention is actually in the proof of work and in the way the network got developed,
Mm-hmm.
and they could have killed this thing in the early years.
Mm-hmm.
In other words, I don't know if you're familiar. There's something called a 51% attack, but if you know the thing that the network provides is the ability to prevent double spending, right?
Mm-hmm.
That we know that each coin is real and therefore it can't, and you can't cheat. However, and it's based on computing power that that runs the algorithm, and now that computing power is enormous, right? There's billions of dollars spent on computers that run this. So it'd be, but in the early days, you could do this on your own Apple PC, or IBM PC, and it wasn't a lot of computing power. And so if you gained up and you got 51% of the computing power, you could put in fake transactions and game the network. Okay,
Mm-hmm.
that was so that's the risk technologically. Now, so if somebody comes along and they try and build another one that's similar, it's going to have a similar design. It's going to have that similar feature. And in the early days, people will, and I've heard it's happened. I'm not familiar with the cases, but I've heard people will attack it. And so in other words, the fact that it kind of grew up, and this actually goes also to the government risk.
Mm-hmm.
I mean, if 14 years ago, every government in the world said, oh my, this is a real threat to our fiat currencies, we need to make this illegal, tax the hell out of it, and threaten to send people to jail if they use Bitcoin, they could have killed it very easily back then. It was just too small. And, I mean, everyone would say, why do I want to mess with that? The governments hate it, blah, blah, blah. But they didn't.
Mm-hmm.
And so now we're here, and it's kind of like, in my view, it's kind of unstoppable. Do you know what I mean?
Mm-hmm.
It's very hard to roll back all of that history. And if somebody tried to start another one, it would be vulnerable to that 51% attack issue. So, I'm not saying something better can't come along, and I always have my eyes open for that. But boy, if you look at the number of users and the size and the compute power, I mean, there's nothing even close. And so it would take something really substantial to bring something else along. And even if that happened, you'd have time to make the change. I mean, silver has kind of been demonetized by gold, and yet it's not worthless.
Mm-hmm.
I mean, what we're talking about would be another coin demonetizing Bitcoin.
Mm-hmm.
And so there would be a transition period. It wouldn't happen in 2 days.
So Bitcoin's really been helped along by Trump. I think it's up 50% or so since he was elected, if I'm not mistaken. And,
yeah.
Obviously we had the BlackRock entry with its $57 billion ETF, et cetera. So again, devil's advocate, if Trump creates a strategic reserve, say a Bitcoin, and it gets adopted by more governments and we have more BlackRock ETFs, just help me out with this. Doesn't that mean that we're getting the centralization? In other words, Bitcoin and
it does. And
we
that's
root for this, but doesn't that mean
it plays against you're dead ass right. It plays against the ethos of Bitcoin. I mean, and that's why the hardcore in the Bitcoin world say not your coins, not your keys, and we're not big fans of the ETFs because the issue with the ETF, I mean, and you're right, Trump is favorable to it, but let's talk about a risk there, okay?
Mm-hmm.
Let's say the next 4 years don't go well, and in 4 years the voters are fed up with this, and they go hardcore blue,
Mm-hmm.
and it goes to the other side. And Stephanie Kelton is now the Treasury Secretary, okay?
Mm-hmm.
And Andrew Yang is VP, and they do universal basic income, and they're going to print money like crazy. And they look at it and they say, gold and Bitcoin are the two things that are telling everybody that the dollar is failing. We can't have that.
Mm-hmm.
We're going to tax them at 90%, and we're going to do what Roosevelt did. We're going to seize the gold, and we're going to seize the Bitcoin. We're going to go to those. We're going to go to those ETFs and say, hey, ETF, company, Fidelity or BlackRock, send us all those Bitcoin and cash your people out for dollars.
Mm-hmm.
That's entirely possible. I mean, and it's certainly one of the risks. Now, if you were a hardcore Bitcoiner, you wouldn't have your money in the ETF. You'd have it on your own wallet in cold storage. You'd have your 12 words, and you might make a decision at that point in time that you didn't want to comply with the order to turn yours in, and you might decide you want to, change your citizenship somewhere else. So, but all of those things are certainly risks, Trey. I mean, that's why I say, there's a sensibility here to having balance among all these assets, right? You just don't know what's going to happen.
Now, you've spent obviously well over a decade studying Bitcoin and given it a lot of thought. And so I can't resist asking this one last question, and we'll move on from Bitcoin.
Yeah, let's move on,
Who the hell do you think Satoshi was? I mean, is it a government? Is it his think tank?
No, let's go into that, okay? So first of all, there are those who say... I have
to remind the viewers that in 22,000 wallets, Satoshi has 1.1 million Bitcoins, which right now I believe is $107 billion. And whoever the person or entity is has never cashed in one, correct?
That's correct. Yeah, they track, because you can see all the transactions on the chain. So let's swat away the idea that it's the CIA or the government or the NSA. Okay, I don't believe that to be the case, because there's a lot of data, and there's some good books on it, and all of the early cyberpunk, I don't know what you call them, the forums where they were interacting with each other on email. Those have all been preserved, and so we know a lot of the early people who were part of the process. Including Hal Finney, who is now deceased, including a guy named Alan Back, who a lot of people think is Satoshi. And I think he's close to being Satoshi, but I'm not sure he is. And I honestly, personally believe that there were probably a couple of Satoshis, and Alan's one of the candidates. Kind of the black horse. I mean, there it could be Jameson Lopp could be in there. There are probably 7 or 8 names, all of whom are candidates. And I think they probably got together and worked on it together, and then they recognized the danger. And they wanted it to be pure, and so they decided, let's not anybody take credit for this. Let's just release it and call the inventor Satoshi Nakamoto. The dark horse is a guy named Len Sassamon, and if you Google him and do some research on him, you'll see he had, and he's dead too. Sadly, he had he died. I'm not exactly sure why. There's some who say he died from illness, and others who say it was a suicide. But in any case, he had all of the pieces and was seen in seen as operating in this area. And so I kind of think it was, between 2 and 5 computer sci guys, who were working on the problem. One of the things you remember, and one of the reasons I didn't get into it earlier, Trey, and one of the things that I was very scared about in the beginning, arguably David Chaum had a role in it. There were, as you recall, because we're sound money guys, there were 5 or 6 other attempts to do this. And they all failed, right? There was eCash, there was DigiCash, there was eGold, there was Hashcash, there was B-Money. eGold was the one the government shut down because they viewed it as a threat. So there were attempts to do this. And when it first came out, I was aware of it. And I thought, that's not going to work. They've tried it before and it never worked. and yet, basically, eventually, they kind of all the technical pieces fell in place, and obviously, it's working. So
I just still think whoever it is to have $107 billion worth.
Yeah, I don't think those coins will ever move.
I trade one. I just don't understand. I'll never understand that. How could
I don't think those coins will ever move.
And or not trade.
Yeah, and or whoever it is could have also had some other wallets that we're not aware of, and they've traded a few.
Right.
Right. It is what it is.
All right. So switching topics to the Fed, one of our favorite mutual topics, you mention in the book this concept of the fourth turning, and I think most people are familiar with that concept in 80-year cycles and the 20 at the end and the fourth turning. But you sort of get specific, and you mentioned you think 2008 was the beginning of a current fourth turning, and that if it lasts an average of 20 years, you're sort of looking at 2023 to 2033, all, rough. And I've heard you personally you've sort of narrowed it down to, you picked 2030. You think this is going to be resolved or start to be resolved by 2030. So my question is, what evidence do you see that we're making progress?
Well, you're seeing, Besant talking about maybe some kind of a Bretton Woods sort of event. I mean, I think you're seeing guys like Ray Dalio saying we've got a sovereign debt crisis, we've got to address it. I mean, it's coming into the mainstream conversation, admittedly slowly. I think probably the biggest driving thing, Trey, the reason why I think it's going to happen is just the relentless math and some of the charts in the book that show, look at the U.S. federal interest expense. It's gone from 300 billion to 1.4 trillion run rate. Look at the debt. I mean, we added as much debt in the last 11 years as we added in the first 200 and something of the republic. You know what I mean? I mean, it's kind of, anyone who's mathematically inclined and sits with a calculator and does compounding recognizes that if you keep compounding something at a fast enough rate, eventually the line goes vertical. And we're kind of in that phase right now. And so people say to me, well, come on, Larry, they've kicked the can this far. They're going to be able to kick it for another 30 or 40 years. And I'm kind of like, well, yeah, I'm sympathetic to that. I hear that argument, but I think the math has caught up with them. I mean, I think, and we're seeing, witness the way that Powell had to create, twice as much money in half the time in 2020 versus 08. So think of it as kind of like it's childbirth, like the contractions are getting quicker and they're getting more painful for the woman. So it just kind of feels to me, it's just a gut feeling, Trey. I could be dead ass wrong. I mean, as you know, in 2008, I was absolutely convinced that was it. And I was dead ass wrong. So, there's no way to know and predict this, but just think of it in terms of the way it's coming into the conversation, though. I mean, I talk about in the book, I mean, I hope you enjoyed the part about, Chris Leonard's book, Hurting the Fed. I mean, here's a guy who's a New York Times reporter, and he was extremely critical of the Federal Reserve. I mean, he was saying some of the stuff Ron Paul's been saying for years. So, I mean, I think people are kind of starting to realize that something's wrong with the Federal Reserve and the monetary system. I mean, when you print 40% of the money in 2 years, and I mean, the one that just blows my mind, I do a lot of my grocery shopping because my wife doesn't like to do it as much. And I just can't believe how expensive stuff is at the grocery. Right. I cannot believe it,
So looking for progress in 2024, we had unemployment at 4.1. We had, GDP at 3.1. We had CPI at 2.4. And yet the Fed initiated a rate cut cycle in September with a 50 basis point cut and cut rates 100 basis points in 3 months. Since that time, through mid-January, the 10-year Treasury yield rose 120 basis points. According to Goldman Sachs, that's the steepest increase in history of long rates after an initial Fed rate cut. They've come down a little bit to 450. Yeah. But what does that tell you?
What it tells me is that the bond market is awake and waking up to the underlying problem. And, I mean, we look, I know you agree with me, at a larger level, we were in a sovereign debt crisis. And there are 3 indicators that are screaming it loud and clear. Bitcoin is at or near record high. Gold just made some more record highs, right, at 2,900. And the U.S. bond market is not healthy, although recently it's backed off of that high that you just described. And I think that's because people think there might be economic weakness. But those 3 things tell me that, the market for money, underlying what is money, the dollar, it's a question mark and becoming more of a question mark in everybody's mind, right? And I think, as you and I both know, I mean, gold's not stopping at 3,000. Gold's going to 10,000.
That was going to be another question. What's your 7 million for gold?
Absolutely. Yeah, no, I mean, look, if Bitcoin goes to as high as I think, gold is going to go multiples of today's price as well. I mean, they both, they're both sound money. I mean, I think I've used this in the past. I'll do it here. It's just, gold is analog sound money. It's great. 8,000 years, huge Lindy effect. And, Bitcoin is digital sound money, much newer, riskier, harder to understand. A lot of people aren't in it yet, but they're coming.
So, in a corollary to that, last year, the S&P was up 25%. It was
Yeah.
one of my favorite aspects of last year is in December of 23, Bloomberg's annual strategist survey, the average prediction for the S&P in 24 was an increase of 1.4%, which was the most bearish in the 25 years of the survey.
Isn't that amazing?
But now that we're up 25%, the December 24 survey was predicting 11.6%, which was the most bullish forecast.
Right. Well, and as your brilliant letter, which I subscribe to and others should subscribe to, wrote, look at how the earnings projections are going down too. I mean,
Right.
earnings growth is clearly slowing, right?
But even with that, with the record 58% in 2 years on stocks, we had an 18% increase in the 10-year yield last year from sort of 360 to 480, and the dollar index at 2-year highs. We still gold outperformed all of them, being 27%. So doesn't that mean we're getting close?
I think it does. I mean, the part we may go here next, but the part that blew my mind, I'm sure it did yours as well. Gold was, and I don't think I've ever seen this, Trey. You would know better because you look at history more. Gold was up 27% last year. The GDX was up 9%.
Well,
that's backwards.
Yeah.
Right? That
was going to be my last question, which is...
Yeah, right? It's like, what's wrong with these gold stocks?
Yeah, but if you go back to mid-October, that was going to be my question. In mid-October, the GDX was up 44%, and the GDXJ was up like 46%. This was in mid-October.
And then it puked.
One of the things that I think I've decided in the last year or two, I think gold stocks have gotten incredibly sensitive to rising real rates. So when Trump was elected, gold did its knee-jerk reaction down, but the stocks really took it. And I think, from the middle of October to the end of the year, the GDX went from being up 44% to being up 10%. So now we've made up a lot of that in the first quarter. The GDX is up 20% or so.
We got a good couple of months here.
3 on the S&P. But don't you think that presents, that was going to be sort of my last question. Don't you think that presents an incredible opportunity here?
Absolutely. Absolutely. I actually think that in the next 6 months, my gold stock fund is going to vastly outperform Bitcoin. Because it's just so damn cheap right now. Mm-hmm. And, the reason, as you and I have discussed this in the past, the reason why the gold stocks are so beaten up, it was simple. You go to Bloomberg and you look at the projections that, the consensus projections for the price of gold. And as you know, gold broke out of 2070 in kind of March of last year, and it squirted up to 2,500, 2,600. But the consensus was that was an anomaly and it was going to come back down. Mm-hmm. And as you also know, the average all-in sustaining cost of pulling it out of the ground has gone up with inflation, of course. And so people were thinking, well, you're getting bigger margins now, but they won't last. Mm-hmm. And that's why the stocks didn't move. And I think that what's going to happen is there's going to be a reawakening and people are going to realize, oh, you know what? This 2,600 is not going down to 2070. Mm-hmm. We're actually going to 29, and then we're going to 32, and then we're going to 36. And the ASICs are going up, but boy, right now, as I'm sure you're aware, I've got companies in my portfolio that they're printing 50 and 60% gross profit margins. On the price of the gold they sell versus the cost of taking an ounce out of the ground. Now they got to pay for the capex and capital costs, but that's a huge margin. There's almost no other industry that makes that much money on a per unit basis.
Mm-hmm. So what's your outlook for 2025 with respect to sort of Bitcoin, gold, and gold shares?
Yeah, sure. So I think Bitcoin is going to continue to trend up. I think it could easily be as high as 150, maybe even higher in kind of a blow off. And then I think we're going to get a correction like we've had in the past. And so that's why I say people have to understand the volatility. I expect gold to go easily touch 3,000. Hell, we're almost there. Maybe 3,500 or 4,000. And I expect the gold stocks to go up 100%. Mm-hmm. My fund is an interesting fund. It's heavily into the gold stocks, and I'm very aggressive in the names I pick. So when I get it right, like 2019, the fund went up 99% in 1 year. Mm-hmm. And in 2020, the fund went up 122% in 1 year. So in 2 years, I've given people 4x their money.
Mm-hmm.
Then I proceeded to turn around and lose the money for 4 years because, the stuff I'm in is aggressive, and Powell started tightening rates and liquidity got tighter and M2 shrank and all that other stuff.
Mm-hmm.
So, I think I look at my portfolio right now and I sincerely believe that, everything in there could double or triple and it still wouldn't be expensive.
Mm-hmm.
So I think gold stocks are going to be a very good place to be for the next year. Finally, I got to tell you, Trey, it's been a really tough slog. And even I, who am a big, huge believer in this whole category, have been discouraged. And so anyone who's in the gold stocks and has been discouraged, I totally get it. But I would just say, don't sell now, because the light is just starting, the sun is just starting to rise, and so this stuff's starting to work. So the other wild card here, we haven't talked much about it, but I want to make people aware of it, is this potential gold reset.
Mm-hmm.
I mean, people need to go to my Twitter feed, read the Murmacan letter on the Besant and Murnan letter talking about basically how there's discussion. Look, the Trump administration realizes the monetary system's a mess, and they're trying to figure out a way to solve it. And one of the ways to solve it is to reset gold at a higher price.
Mm-hmm.
So that's being discussed. And if that occurs, think of the implications on these gold stocks. I mean, they're finally, Trey, going to see some love.
So in your fund, by the way, just as a follow-up, are you pretty much 100% gold, or do you dabble?
No, I was able, it's funny, way back when Bitcoin emerged, I thought it was attractive, and I went to my investors and I said, guys, I'm a sound money fund. You bought into it because you're gold guys, and I think this Bitcoin thing has merit too. I'm going to buy 1 or 2% into Bitcoin. And about 5 people said, that's not what I paid you. I'm out. I want my money back. I said, all right, fine. But I did it, and this was, Bitcoin was $5,000 at the time, right? So, that 1 or 2% has obviously grown quite a bit from those days. So now it's closer to 15% or something, and so there's that piece in there. And I have not sold any Bitcoin. So, but the rest of it is gold and gold stocks, because that's what I sold myself on, and that's what the fund has always been. And by the way, I may not, the fund may not run for another 10 or 20 years. I mean, I've to your earlier question of with the Bitcoin thing going on, how do you mess around with these stocks? I mean, I believe in them, and it's going to continue to work. But, I'm also at the stage of my career in my life where, I think when we get the next big run here, maybe it'll be time to move away from it. And I just don't want to actively manage other people's money, because one of the things that has happened, it's been a hard ride. And a lot of my, and the fund is I'm actually gated right now, because I had one very big unbelieving investor who wanted his money back, and I had to gate the fund. And so, it's been tough. It's been really tough, and I don't want to have to go through that again.
Well, Larry, this has been very instructive. Good to see you, and I want to look forward to the next couple of weeks. Let's get caught up again and focus on
Happy to do it. Yeah, happy to do it. We can talk names if you like. We can do another one of these, but it's always good to see you, Trey. And like I say, I really appreciate your letters, really appreciate your friendship through the years, all the support. Mm-hmm. I don't know if I've succeeded in convincing you to buy a little Bitcoin. I hope I have.
Mm-hmm. Not enough, but we're getting there.
Well, there you go. All it takes is a little bit. There's optionality.
Listening to you yesterday point out you can't be influenced by prior prices.
No, that's right. Yeah, and that's painful. Yeah, you've got to, the way, and let me just reprise that if I may. Mm-hmm. A lot of people come to me and say, I can't pay $100,000 for something you bought for 10. Mm-hmm. And I say, I get it. I totally get it. Mm-hmm. Try and use a different model. If the financial system is the Titanic and Bitcoin and gold are, two of the lifeboats, and I bought a seat on the lifeboat. I bought gold at $400. Mm-hmm. It's now, almost $3,000. I bought Bitcoin much cheaper. It's now $100. How much are you going to pay for the lifeboat? You want the lifeboat, you got to pay today's market price.
Right.
And it sucks, but you got, I got to tell you, everyone feels like they paid too much for Bitcoin. Everyone. When you're buying it, you feel like, God damn it, I'm paying too much. But you know what? Just let 5 or 10 years go by, and I think you'll not regret the decision. That's my belief.
And congratulations on the book. I really enjoyed it.
Oh, thanks. I
hope you
the mission,
kill it with it.
Trey, this book will succeed if I'm able to get people that aren't you and me to understand and believe in sound money, because as I know we believe so strongly that it's the thing that's made our society so toxic, and that if we could get back to a sound money system, this would be more like the world we grew up in, where, you were on Hyannis and, playing with the Kennedy kids on their compound kind of thing. So
Terrific. Well, Larry, good to see you, and we'll talk to you soon.
same, Trey. Thank you.
Take care. Bye-bye.
That's a wrap on another discussion here on Wealthion. Thank you for joining us. If you need help being financially resilient, please head over to Wealthion.com and sign up for a free, no-obligation portfolio review with one of our registered investment advisors. And remember to follow us on social media for the latest news and information to help you invest wisely. And if you could like and subscribe to the channel, we'd greatly appreciate it. Don't forget to hit the notification bell so you can find out when we post new videos to the channel. Thanks again for watching, and until next time, stay informed, be empowered, and may your investments flourish. And if you like this content, please watch this video next.